Welcome back to Cheddar Business.
President Trump taking the international spotlight at the World Economic Forum in Davos, Switzerland, speaking about putting America first and the global economy. Joining us now is Ryan Payne, president of Payne Capital Management, and Shah Gilani, Capital WEF strategist. Guys, it's so great to have you on the show.
Great to be here.
Shah, I want to start with you. What do you think the main message Trump is trying to convey is?
That the economy is strong, and that what he's trying to do with China is push back, keeping America great and putting America first. The Chinese, we know, besides the technology theft, the transfer of technology, all the big state firms are subsidized. That is an imposition on American firms, and it makes the level playing field completely, full of bumps, and the United States wants to clear that up. So I think he's doing the right thing, he's saying the right thing, his messaging has been pretty constant, and I agree with what he's saying, and I agree with most of his policies.
So no surprise that he's touting the power of the U.S., Ryan, but we do know that the IMF actually downgraded U.S. growth here just in the past 24 hours. U.S. growth expected at 2% this year versus global growth of about 3.3%. Are you anticipating that foreign money continues to flow into the U.S. and investments here in the stock market, or we see a tapering off of that in the new year?
Yeah, well, the dollar's already starting to weaken, so I think finally that trend might might stop a little bit, and we're going to see money flow around the world, which we'd like to see. I mean, the dollar's been so freaking strong, which is a problem for exports and things like that. So there's some negatives there too. But yeah, I think finally we're going to start investing in other markets and other places, which is a good thing. Global growth is a good thing for everybody.
Well, it's not just Davos that's happening right now. Impeachment also taking center stage with the trial beginning today. Ryan, why do you think impeachment hasn't affected the markets?
Well, because it just doesn't matter, Tim. Let's be real, right? We have the Senate's controlled by the Republicans. Nothing's going to happen. It's great theatrics, but the market hasn't reacted at all. I mean, it's a non-event.
Shah?
Ryan is spot on. Everybody knows, investors recognize that nothing's going to happen in the Senate, so the impeachment process is essentially over. Senate is going to just dust it up, and it'll be under the table. Markets have seen this all along. The markets have continued to rise in the face of every bit of bad news that supposedly would knock them down a little bit, and here we are again at new highs. We'll probably make new highs yet again today, starting maybe by the end of the week, again and again. And a lot of that is money coming in because there's nowhere else to go.
Certainly could impact the legacy of President Trump, though, right, when we think big picture. The Illuminati over there in Davos, Paul Tudor Jones, Steve Schwartzman, basically saying that the market looks frothy at these levels. It's hard to find great value. Ryan, where are you finding value in this market?
Well, I think internationally does look good. I think if you look at valuations overseas, they're very attractive versus the U.S. If you look at global growth, I think it's starting to reaccelerate, which is a good thing as well. So you have that reacceleration of growth. You have low multiples around the world, and even if you look in the U.S., if you're discerning, like value stocks here are very cheap versus growth stocks. So if you kind of break out asset classes, you get some great value right now as an investor.
What about you, Shah?
I agree. There's certainly areas for growth down in the growth sector, in the value sector, because a lot of those stocks have been left behind. All the big stocks, the tech stocks, the momentum leaders of this marketplace continue to gain their multiples, and that makes them a little frothy looking. Right below them and at the bottom of the chain of all of the indexes, you've got all those stocks down there that don't have the same cap weightings. Those are starting to look very inexpensive.
Are you expecting a decoupling of big tech this year, right? Apple certainly looks overvalued, but a company like Facebook seems to be a bit undervalued.
I mean, is it all undervalued? I mean, Facebook still trades at 23 or 24 times forward earnings. I wouldn't say it's undervalued, but I think, yes, maybe Apple over 80% last year. It's probably getting a little bit frothy there. So I'm not sure if there's a decoupling there, because every time you buy the S&P, you're buying all those stocks.
It's really a function of earnings, and this is a very important earnings season. Apple's earnings coming out on the 28th. The expectations for about $4.53. That's about above $4.12, I think, a year ago. If the market sees it and it likes it and it's better than consensus, the market's going to continue to put money into companies like Apple. It's really just a momentum-driven trade. As long as the earnings are there, then the PEs get justified eventually by the earnings. Market continue to go higher.
Look, Apple's been on an absolute tear over the last year. I don't need to tell you. It's been insane. I don't need to tell you guys that. Shah, what could derail Apple?
Well, bad earnings this time around. One of the things that could derail Apple, I think, is if the earnings hit is somewhat of a surprise. I mean, a deep surprise. I think you'll see Apple take a little bit of a hit, because no one's expecting to be surprised, expecting it to be better than expected. So that's the kind of thing that would upset the market. Apple being so heavily weighted in so many of the big indexes and being in another 201 ETFs has to be accumulated a lot. And that means, in reverse, if investors are selling their ETFs because they go down, because Apple has a large weighting in them, then the sponsors of those ETFs, they have to sell all of the shares of Apple to meet redemptions. That could cascade, that possibly could hit some stops in Apple, cause it to go down. You could have some kind of negative feedback loop. Beyond something like that happening, which I don't expect, Apple I think goes higher.
Okay, so President Trump still taking on the Fed despite multiple rate cuts last year. Let's listen to what he said earlier this morning in Davos.
And even now, as the United States is by far the strongest economic power in the world, it's not even close. They're forced to compete, and we compete with nations that are getting negative rates, something very new, meaning they get paid to borrow money, something that I could get used to very quickly. Love that.
Okay, the talking point of negative rates still not going away in 2020. Ryan, what are you anticipating in the showdown between the Fed and President Trump this year?
Well, it's absurd, first off, because rates
Why?
around the, well, first off, global rates are actually starting to go up around the world. We had like $8 trillion worth of negative yielding securities in the summer. Now we're down to 11 trillion. Rates are starting to go back up. The Fed's not going to do anything this year because Jay Powell's afraid to do anything during election year, so they're going to stay put. Nothing's going to happen with interest rates, but long-term rates could go up. That's my bold prediction here, Shah.
I don't know that long-term rates could go up. I think the Fed's going to try and keep them suppressed for the most part. I think if they do go up, and they go up because inflation occurs and the Fed's not able to stop that, and then we go to negative rates because of that, we have a real economic problem at that point. So the Fed is doing everything they're supposed to be doing right now. We know that they've got this put under the stock market. That's another reason the market remains firm. But as far as interest rate goes, if we ever get into negative rates in the United States, something is far wrong.
Very briefly, guys, any concern about this deadly virus that seems to be sweeping across China right now, affecting global markets?
Still a little early to tell. I think they've had 4 deaths so far, so it looks like it's been relatively contained in terms of pricing.
Up to 6 is the latest.
Up to 6, okay, since then. So I think you have to see how much further that goes because the market seemed kind of muted on the reaction right now.
Yeah, the market's got it under control right now until something negative happens, and God forbid it does. But SARS, there were over 800 deaths, and we saw what happened. Basically, the global economy stopped for a minute when SARS really took hold. People were frightful of traveling, et cetera. So God forbid something like that would happen again. But I don't see it happening again with a few deaths, fortunately, as there have been. Hopefully they'll contain this.
Ryan Payne, president of Payne Capital Management. Shah Gilani, Capital Wave strategist. Guys, thanks so much for joining us today. It's great to see both of you.
Thanks for being here. Thanks for having me.